Good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. We're winding down the week, and we want to take a look at the technical side of the market. We want to set up some stocks that are going to be having earnings on Monday. Now, there's a plethora of them, but I picked up some ones that have some interesting wrinkles to them, some that we know very well by name, others maybe some implied volatility, and others that we actually see that have some notable events going on. So let's start by looking at McDonald's. Everybody knows the old golden arches, trading at 122.34 right now, up 16 cents. If you take a look at the options right now, over the next 7 days, coming into this event on Monday before the market open, they're pricing in that over the next 7 days, the stock could trade around $3.56, either up or down. That gives you a range of basically 126 to the upside and 119 to the downside. So an interesting range there. We've been staying inside those ranges going into the earnings announcements, but we're going to keep an eye on this, especially over the weekend. The 14-day range is $4.27. Now, why is it helpful to understand the ranges? Well, if you know that the stock has the potential to move either up or down a certain amount, you can anticipate, all right, do I have a stop at 120, 121? There's a high probability that it could be taken out if you're long or if you're covering a short. Same thing with if you have an option strategy. With an option strategy, this helps you with strike selection if you're initiating an opening transaction, and it helps you with risk management on a closing transaction, both for options and stock. Now, are these heightened levels? In other words, are these really large widths? The implied volatility rank, which is the component that I look at to judge whether or not this is a big violent move being priced in or just, relatively not heightened expectation of violent moves. And right now, the implied volatility rank is coming in at 46%. Now, critical levels that I'm going to want to watch on McDonald's, and this is going to be really for the bulls because McDonald's has been on a bull tear for quite some time, is 121, 120, and right around 119.80. Those are going to be levels that you're going to want to watch if the bulls are going to stay in control of McDonald's. Now, McDonald's typically doesn't move a lot. It's tight bid-ask spread on both the options and the stock, but we have some unusual times these days, and we're walking into what could be some potential volatility. Now let's take a look at another stock, one that you may not know very well. It's called ResMed, ticker symbol RMD. Stock's trading at 63.46, trades on average about 350 to 400,000 shares. Now that might be a little bit below the million share on average mark that some people hold a barometer to, but I wanted to take a look at this one because there's something very unusual in it. It has vol. The options right now that are expiring in 28 days are pricing in a range of this for the $63 stock of $5.52. So you have basically a range of between as high as, $69 and as low as right around $58. Now, the implied volatility rank going into this event is 100%. That means it's the highest level that volatility's been in the last 52 weeks. That's telling you that they're expecting a big violent move in this stock. With that being said, then I look at the critical levels because this stock has been moving to the upside. The bulls have had control as of late. 63 is going to be a critical level for the short term. 61 is going to be for midterm, and 61, 62 is midterm and long-term support. A challenge of 62 puts long-term support at risk. And you could see a bigger break. We're going to watch this one very closely. This one's reporting after hours on Monday. And then finally, Yahoo, ticker symbol YHOO. Stock's trading at 41.96, down to about 13 cents today. The options are pricing in a 7-day range of $2.27. That means you could see it as high as 43 and some change or as low as 38 and some change. 38, 39 and some change. So you have a pretty decent range to work with for the next 7 days going into the earnings announcement. For the next 14 days, it's $2.42. So you can see that there's some volatility that's being priced into next week. Now, the implied volatility rank is coming in at 29%. That is relatively low, so I'm not expecting a heightened expectation of big violent moves, but we have to keep an eye on this. $40 is going to be a critical level, and then you're going to watch 39. Those are the two levels that you're going to want to watch if the bulls are going to continue to have control. A pullback into the $40 level, that means that there's an opportunity to pick up stock at cheaper prices, obviously, than where it's at today. And if the thesis still stands after the an earnings announcement, that could be an opportunity to maybe scoop up some stock, and we'll see if maybe the buy on the dippers come in on that play. All right, folks, that's it right now for Tech Talk. We're going to do a lot more action, and we have some exciting news here at MarketStream.live. We're going to be rolling out some new tool sets. Yes, new tool sets, probability calculators. We're going to have some portfolio modeling tools, as well as a plethora of other ones that are going to be rolling out on the site, so keep an eye on that. We'll be back at 4:30 Eastern Time, where we're going to be covering up all the market action from this week. We'll see you here at MarketStream.live.